Today on CNBC, we are in trading rooms across the country checking on everything from tech stocks to muni bonds. I am here in Stamford, Connecticut on the trading floor of Tradition Energy. Joining me now is Addison Armstrong, Tradition Energy Senior Director and CNBC contributor. Thanks for joining us. First of all, in the break, we were talking about crude getting absolutely pounded today.
Yeah.
What's behind that, do you think?
You know, I think there's a little bit of rotation going on, as we heard the earlier guest talking about. I think there's also some buying of the rumor, selling of the fact. We've had some good economic data out this morning. I think that's being sold into. Also, the dollar's playing into it today.
Okay, so tell me, where does it go from here? Give me your forecast for 2011.
Well, I think, the first quarter is going to be strong. I think for crude oil, I think you're probably looking at certainly a run to 100, maybe even 105.
Wow.
But that's really basis of a lot of speculation. There's, all the time, every year in January, we see a lot of money coming into this market. Commodities are the big play this year, right? So, and certainly that's all coming from the long side. You got the doctors and the dentists coming in now, right? So they want a piece of this. That's going to move the market higher. But I think after the first quarter, when we start to see some slowing in the U.S. economy, the emerging markets, China, I think you're going to start to see the fundamentals reassert themselves. I think we pull back.
So you think that's the top for the year, really? You think 105 is as high as we'll go? And your average for the year, I think, is 88.25, right? I was really surprised. That's low.
It's low, but I think it reflects really the fundamentals of where we are. We've had this big run-up in prices since QE2, basically.
Right.
It's all based on speculation. Inventories, even though they tightened up a little bit in the fourth quarter globally, have not really come down. We're still at 5-year highs in the OECD. We're near the 5-year high on U.S. inventories. So, and production is still really good. We still get that big cushion of OPEC spare capacity. So, I argue against people who say there's a lot of demand out there.
Sure. Natural gas you see at 425, is it? That market kills me. It's so hard to trade. 420 is your average. At what point do you think that crude oil prices and gasoline prices hurt the economy and in turn hurt the stock market? What's the number you're looking at?
Well, I think it's starting to hurt now. I think that certainly gasoline at $3 a gallon on a national average is not healthy. I mean, think about it. The last time we were up here, unemployment was only 5.8%. And we were growing as an economy. So prices at this level, I think, are going to be very difficult for consumers to handle.
We're going to hold you to that forecast, Addison. Thank you so much. Now, Tradition Energy, as you heard, skeptical about the upside potential for energy prices in 2011, especially oil. So should you invest accordingly? Joining us now is John Kilduff, partner at Again Capital and a CNBC contributor. John, first of all, what do you think of Addison's prediction?
I think they're, as usual, very spot on. I concur with much of what Addison said, although I do believe the demand side of the equation is relatively strong, but I do think it's a terrific operating environment for the industry players.
Is 105 about your top for the year, or where do you see it peaking out?
I don't see us going much above that either, and I certainly think that this $3 a gallon pump price is affecting consumers. I think the hit we saw in consumer confidence earlier last week is evidence of that.
Now, in order to invest on that, I know that you like Exxon a lot. The stock has been lagging, though, because of that acquisition of XDO. You think it's going to bounce back? I
do. You notice its peers have really been on fire, Chevron and Conoco, and Exxon's lagged. I think the natural gas prices are going to hold up. I think ExxonMobil is going to benefit from that portfolio of XTO and its refining portfolio and its oil production portfolio. Even Addison's low-end number for crude, 77 or so, is just a terrific number for these companies.
Larry, you had a question?
John Kilduff and Melissa, there's a very comprehensive story on the front page of Investors Business Daily this morning on oil, and it makes two important points. I'm going to get your take. Number one, it says that OPEC has plenty of spare capacity and does not want to see a triple-digit price explosion for fear of drowning the world economy. What's your take on that point?
Well, to me, Larry, I think that's right. Although, as we've been seeing at their past two meetings, they're willing to let this run a bit more than any of us would like, which is what they are want to do. And they need to be putting more barrels on the market now. They did uptick last month. There was a sizable increase out there to the market under the radar, but we needed to jawbone this thing down a bit.
And the second point they make is that with the spare capacity, Saudi Arabia, Iraq, Nigeria, and Angola are all going to put more barrels of oil on the market, John.
I would fully expect that, Larry. I mean, they are making a ton of money here, and quite frankly, they need it. All their economies need it, the Saudis in particular, when they look at their demographics. But they don't want to kill the golden goose either. They saw what $147 a barrel crude oil did to us last time around. They are going to try to stem that.
Yeah, I totally agree. I think they love it right here, maybe a little bit lower. John, thank you so much.